In this video, I'm going to show you a very simple Heikin Ashi EMA trading strategy that produces super high probability trading signals while also filtering out slow and ranging market conditions. Not only that, but I'm also going to show the dark side of Heikin Ashi candlestick trading that 99% of YouTubers don't talk about. Let's get right into it. Heikin Ashi candlesticks are modified Japanese candlesticks. They are calculated using the open-close data from the previous period candlestick and the open-high-low-close data for the current period candlestick to create a combo candlestick. The reason why the Heikin Ashi candles have a much smoother, less choppier look is because it's essentially taking the average of the current and previous candle. The advantages of using Heikin Ashi candlesticks are to filter out false trend reversals, market noise, and provide a much clearer view of price, so you can more easily identify trend momentum, trend direction, and trend changes. There are disadvantages of using Heikin Ashi over the traditional Japanese candlesticks, however, which we will go over later in the video, so watch till the end. We're on the US dollar versus the Japanese yen on the 15-minute chart. We're going to use 3 different indicators for this strategy. Go on TradingView and in the Indicators section type in Ichimoku MTF, this one by Kivan Kozbilgik. Go to Settings and under Inputs, we're going to set the time frame 2 units ahead of our trading time frame. Since we're on the 15-minute chart, we're going to set it to 1 hour. And under the Style tab, we're going to uncheck all 5 of these lines. This indicator will act as our long-term trend filter. When price is above the cloud, we look for buy setups only. When price is below the cloud, we look for sell setups only. When price is inside the cloud, we don't look to take any trades. For the next indicator, type in Dual EMA. This one by Base Department General. Go to Settings and under Inputs. We're going to set the fast EMA to 20 and set the source to high. Then we're going to set the slow EMA to 20 and set the source to low. Now you should have a set of EMA channels like so. The reason why we use a dual EMA instead of just 2 separate ones is because we're going to make room for one more indicator. Type in True Strength Index. Go to Settings, and under Inputs, we're going to set the long length to 21 and short length to 9. Under the Style tab, we're going to turn off the signal line, then make the true strength and the middle line more visible, like so. Then finally, we're going to turn on Heikin Ashi candlesticks. Click on this tab, and it's this one right here. Buy setups. For buy setups, we need 3 conditions to be met. Condition 1, we need price above the cloud. Condition 2, True Strength Index is above the 0 line. Condition 3, green candlestick needs to break out of top the white EMA channels with very little to no bottom, Heikin Ashi wick. We have a few options for our stop loss placement. Either at the bottom of the dual EMA channel, around the middle of the dual EMA channel, at the bottom of the breakout candlestick, or at the recent swing low. For the examples in this video, we're going to set our stop loss at the bottom band for buy setups and the top band for sell setups. We want our take profit at least 1 to 1.25 risk to reward ratio. Here's another example. We have price above the cloud, the true strength index is above the 0 line, and we have the green candlestick breaking out of the top of the white EMA channel with little to no bottom wick. We enter our trade at the candle close and aim for at least a 1 to 1.25 risk to reward ratio. Here's another example. We have price above the cloud. The true strength index is above the 0 line, and we have the green candlestick breaking out of the top of the white EMA channel with little to no bottom wick. We enter our trade at the candle close and aim for at least a 1 to 1.25 risk to reward ratio. Sell setups. For sell setups, we first need price to be below the cloud. Second, we want the true strength index to be below the 0 line. Then finally, we need a red candlestick to break out of the bottom of the red EMA channels with very little to no top Heikin Ashi wick. We want our take profit to be at least 1.25 times our risk. Here's another sell trade. We have price below the cloud. The true strength index is below the zero line, and we have a red candlestick breaking out of the bottom of the red EMA channel. We enter our trade at the candle close and aim for at least 1.25 times our risk. Here's another sell trade. We have price below the cloud, the true strength index is below the zero line, and we have a red candlestick breaking out of the bottom of the red EMA channel. We enter our trade at the candle close and aim for at least 1.25 times our risk. Here's another example. Heikin Ashi is great. Don't get me wrong, but the candlesticks themselves are a lagging indicator since it's taking the average price of the previous and current candlestick. The current price shown on a normal Japanese candlestick chart will also be the current price of the asset, and that matches the closing price of the candlestick, or current price if the bar hasn't closed. Because Heikin Ashi is taking an average, the current price on the candle may not match the price at which the market is actually trading, and if you enter a trade, it's likely you'll get filled at the wrong levels. So our first tip is to trade with two charts open at the same time. One with Heikin Ashi and one with traditional Japanese candlesticks. This is so that we can see where price really is when we're entering trades. As you can see with this example, sometimes the difference between Heikin Ashi and traditional candlesticks are too great, and you may want to avoid entering certain trades because of where your entry price is relative to your stop-loss placement. Second, you only want to trade this trading strategy during the London and New York sessions when spreads are the lowest and when there is sufficient volume and market participants. To identify those times on the chart, go to the Indicators tab and type in Sessions. We like to use this one by Lux Algo, since it's super customizable and it also shows the sessions high and low. And lastly, consider trading only the first few pullbacks of the trend, about 2 to 3 trades max on any one trending move. The trend will eventually lose its steam and start consolidating or even reverse trend direction. Remember, this is not financial advice. Be sure to do your own due diligence and make sure to do your own back and forward testing before trying this strategy out in the live markets. If you enjoyed this content and haven't already, smash the like button and subscribe so you don't miss out on future content. If you're interested, we also have premium content on our website at thetrademeta.com. See you in the next one.